Hello, this is Steve Malone with Compass FX. Hope you're doing well today and you're getting some good trades. The first quarter of 2012 has come to a close, and many of the expectations that folks had at the end of the year really haven't come to fruition. Some had been expecting to see the euro dollar come down below the 130 and remain in that area. However, with sovereign debt issues seemingly to improve in the Eurozone due to the long-term refinance operations by the ECB, we seem to be in this sideways move, and the outlook right now for the euro dollar continues to be in this sideways range. And with taking a look at the larger picture, when we get into this sideways movement on a larger picture, well, the smaller picture then reveals more range. That's right, range, range, and more range for the euro dollar until something significant in the marketplace happens and we see a move on the euro dollar. Now, interestingly, today the CFTC reported that the net shorts in the euro dollar has increased by 8% this past week over the previous weeks, and therefore there's a possibility of seeing the market short the euro. However, where's the easy money for most institutions? If many folks are short the euro dollar, the easy money for the institutions is actually long to go hit the stop loss orders on the euro dollar, and we saw some of that last week as the euro dollar happened to move up. Let's take a look at this on a big picture. I'm on the euro dollar weekly chart. I just want to lay a few things out for you. Taking the trend line, the diagonal trend line, and let's just go to a few points, and I want to point out a few things to you here. Look at the big picture here. We can see that we're in this sideways range. Now, at the end of 2011, this move down. Some were expecting to see a little bounce back up around January and then a continuation. That didn't come to fruition. And we can see this sideways movement. When we drop down to the daily chart and look a little bit closer, you can see from a daily perspective that the market here has these highs and this average low. The high about 34.80 and the average lows being around 30.20 level. There was an expectation in the marketplace that we could be in for a head and shoulders pattern. Take a look at this being the head up here, a shoulder over here, and another shoulder presenting itself right there with the possibility of this being the neckline. The only problem with that is that it's an upward neckline. Usually an upward neckline is fairly weak on a potential break. Market never broke it, and we push back up. Now we're in this range here from 34.80 to 30.20. Now taking a closer look at the daily chart, you can see there's a little bit of a range right here. So what I want to do is go down to my hourly chart, and you can see that this range is from 33.80 to 32.50 with a midpoint centered about the 33.15 level. Now this is interesting because now 32.50, which was the key midpoint on the daily chart, is now, in an intraday perspective, our new support level. And the midpoint of the range is becoming 33.15. So what's happening is we're seeing the euro dollar kind of grind a little bit higher and a little bit higher, and mid-range levels are becoming new support levels. So watch to see if the euro dollar decides to grind a little bit higher, coming back up to the 33.80 level, that 33.15 becomes a new support level if we take out 33.80 and we move on up to 134 level. There's some expectation in the marketplace to see 134 to 135. Some are even saying there's a possibility of even 136. I'm a little hard pressed to think that, based upon the fundamentals, that we'll see 136. But I do think there might be a possibility for the market to make one more push up to get to that 134.80 to 135 level. If you take a look back on the euro dollar daily chart here, we can see that there's a possibility. This looks like a double top here, but don't be fooled. This could be a 1, 2, and then a third move up. The market likes to move in steps of 3. So we could have step 1 flat, step 2 flat, step 3 back up to 34.80, might pin high up towards this trend line before we see a move back down. It's just my thoughts going into the market this week. I do expect this week to be fairly quiet though as we go into the Easter holiday. There are three main reports coming out: the Australian dollar interest rate, the euro interest rate, and the sterling pound interest rate. I don't expect much of a change in the interest rates, but I do expect some change in monetary policy or fiscal policy by the central banks. there might be a change in the Australian interest rate due to China's movement in the marketplace compared to the Australian dollar. Other than that, we have the non-farm payroll on Friday morning. But though I think with this non-farm payroll, it might just be that one big event for the day, as most of the central banks in the world will be closed for the Good Friday holiday going into the Easter holiday weekend. Well, folks, it's Dean Malone with Compass FX. Just be aware that we're in this big range, but intraday it appears that the range is grinding higher on the daily as old mid-range levels on the daily and higher time frame charts starting to become support levels. Again, we had 30.20 as a support level, then 32.50. As we step in intraday, 32.50 becomes a new support level. And if the market continues to grind higher, then 33.15 will become a new support level, as there's a possibility of 33.80 breaking, and we go back up to test 134 and possibly on up to the 135 level. Well, folks, Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. Be careful of the range. In a range situation, look to buy on the dips and sell on the rallies. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.